This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with investor advisor Joy Schoffler. Joy, thank you for joining us.
Yeah, it's my pleasure. Thank you for having me.
Great. So what was your background before investing in early stage companies? What did you do before this?
Yeah, so I owned Leverage PR in town. I sold that about 3 years ago, and Leverage worked with a lot of early stage and mid-stage companies, primarily in tech, lots of financial technology, real estate. We did some life sciences and cybersecurity and kind of across the board. South by was a client. So lots of fun work there.
Well, great. So what excites you right now?
Gosh, I feel like it's a little bit late in the cycle for a lot of things. We've had a really good run for a lot of years. And the way that I look at investments is really looking at where can the most value be added. So whether that's a early industry that you can get in as it's a growth industry, or just purely looking at my market cycles, kind of buying low, selling high. A lot of the heavy investment I did was early back in, probably 2012 through 2014 when we were still relatively early in the cycle. For real estate, I did quite a bit of investing 2007 to 2011, I think, and then a few things peppered in here and there. But I've been kind of stashing my cash and waiting for a little bit more value in the market here. I think valuations are fairly high.
Well, great. So what's your advice for people that are investing in real estate? What do you tell them to do before they write that first check?
So I think, first of all, cash flow is very important. I think there's a lot of sponsors out there who are still underwriting for a lot of growth in the market. And depending upon the asset class, that growth may or may not come. It's really easy to have a good track record over the last 10 years with how well the market's done. But when times are a little bit rough, you want an operator who has a lot of cash, isn't over leveraged, isn't going to just walk away. So experience with the operators you're investing with if you're not just buying property outright. And just to make sure that you're not utilizing growth assumptions from the last couple of years, but really modifying it to show a potential downturn in the coming future.
So let's talk about the state of investing in real estate. You talk about the cycle here, and it has been a while, and you kind of wonder where the end is. How do you see the real estate industry evolving? Of course, it's at a very high level right now, but what changes do you see coming up?
Well, I think we're already starting to see it a bit over the last couple of years, a lot better use of technology. So platforms like Juniper Square, there's a real great one that I've been eyeing a lot called the Rocks platform, which is kind of automates the investment management and commercial lending space. So really just looking at how, in general, real estate can be improved by utilizing new fintech. I think there's a lot of room for operational efficiency within the real estate industry. And we're seeing that adoption slowly happening, but I think there's still a lot more room to grow.
And where do you think the fintech will have its biggest impact in the real estate market? We hear about blockchain coming in to disrupt some of these sectors and provide trustless systems and so forth, but what else do you see out there?
So there are so many new real estate technology platforms. The Rocks platform, which I mentioned, they do everything from kind of commercial real estate loan origination through the entire use of algorithms and AI to go and make fund kind of that initial due diligence process easier, especially on the debt side. So utilizing technology in your decision, basically in that first pass of looking at deal flow. So if you're on the acquisition side and you've got 50, 60 deals you're looking at a month, if you're able to kind of input all that data into a platform, and now you're only needing to look at 5 or 6 because you're automatically seeing that they don't meet your particular criteria utilizing decision engines, then you can just look at a lot more deal flow and really just kind of improve your overall chances of finding something that really works.
Do you find AI coming up more and more in these platforms, and how is it used?
So I saw a really interesting company the other day, and the name's escaping me, but they're looking at markets, for example, to try to identify potential properties that are undervalued in the market or markets that are primed for growth. So they're utilizing lots of different information, whether that be company relocations, different economic factors, inputting policy, a number of things, and then putting that into the engine to see which real estate markets are potentially undervalued. So there's a lot of fascinating tools out there that can really help to make better decisions on the investment front, which I think are pretty fascinating because it's always real estate's hyper local. It's very market dependent. You can have one market that's declining and others like Austin that just seem to grow forever. So, really being able to utilize the data and find out where those growth markets are, especially ahead of it becoming widely known that it is a growth market and prices shooting up.
Well, for your own investments, what is your thesis? How do you make decisions to go forward with an investment or not?
So again, it all comes down to team. Nothing else matters if you don't have the team and the track record behind you to be able to accomplish the things that you're going to accomplish. And that's true whether you're in the startup field and real estate and really anything. It's all about the team. An idea, as you tout all the time, ideas are kind of a dime a dozen, but it's the team who implements, who can pivot, who can change. A lot of times what people first initially pitch in the early stage isn't the end product that they exit with. So having that team who's really solid, understands what they're doing, can pivot and react is probably the most key thing from my investment thesis perspective. And then just looking at the industry, where is it potentially going to be disrupted? Will there be things, are there new technologies that are coming in that'll make this technology obsolete? Are they very customer centric? I think technology is fabulous, but it's got to, one, be seamless, and then two, still have a beautiful kind of customer experience built in there. It's not enough just to have good UX. You've got to have kind of the good customer experience as well.
Well, great. Well, before we kicked off today, we were talking about the challenges in the space for startups, and the issue is getting exposure for the startup, which doesn't yet have a brand and doesn't have a big following yet, and there's many others just like them. How do you coach them on getting more exposure for their startup?
So when I owned my PR firm, and there's lots of different great agencies and marketing consultants and people out there, what I always used to say is what is most important is being able to be in the right room, both on and offline, and then having the right message when you're there. So as a brand, you get to control perception a lot of times. So in that controlling of perception, you really have the opportunity to kind of tell a story and really make sure that people understand what it is you're doing, how you're doing it, and then you're in the right places talking to the right audiences. So you want to kind of take people through a flow and a journey and automatically answer a lot of the questions and objections they have with your messaging. And then really celebrating successes through case studies and announcements and different things out there. It's really important.
So you mentioned both online and offline. How do you trade off between the two? I'm a big believer in both, but the question is how much of each one, because each one takes a different type of effort and you're always trading off between those. How do you make that decision?
So I think that from an online perspective, the online actually helps the offline because it shows up in your overall results and it goes to kind of build the story about who you are and what you do. And so as people are going through that process of building their brand and identity, the rooms that they're in online are very important, right? The different publications, what people are saying about you, what types of customers you're talking about in your case studies or press releases or other announcements, what kind of awards you've won, things of that nature. It's another layer of your story, and it's a story told from somebody else's perspective, which validates it even more. So building that base up first before you go off and do a lot of offline things, right? Kind of in-person things, I think is pretty important. And then when you are selecting the things to go to for services business, for example, pick an industry you're representing. If you're as a PR firm, we never went to PR events. We went to fintech events. We went to med tech events. We went to different places where we were the minority. We weren't trying to be in a room full of other PR people. We were really around our particular industry, understanding them, gaining expertise there. And so as a business, wherever it is your customers are, where there's a high concentration of your customers, those are good rooms to be in. Those are good rooms to win awards in, to speak on panels in front of. Just being in those places often has a very positive result.
Well, that's good advice. So we always ask about hot sectors coming up or new applications coming up. And in the real estate space, what do you think are good new immediate opportunities for investors to pursue in that real estate area? What do you think is the hot opportunity this year?
So I think that there's, like I said, we're late in the cycle, but I do think there's still some interesting opportunities out there. I personally have been allocating towards a commercial lending fund this year that has a really good track record. So it just really depends on the opportunity. Like I said, mostly right now, I'm kind of holding on to my cash and waiting until we have a bit of a downturn because I think we're at pretty high values. Although if interesting opportunities came up in Austin, just with our projected growth, if they were undervalued, then that's definitely something I'd take a look at as well.
Well, great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I think if you're from the investor side, I think it all just goes back to, really looking at the market cycles, really looking at growth. You can get in mid-market kind of as the market's heading up and have a lot more opportunity than when we're at the peak and going down. So just kind of really taking a close look at that. On the company side as well, I would say just making sure that you're looking for investors in the right place, looking for telling your story in the right way is a big thing as well. I'm personally out of the game, but there's so many great people out there who are just phenomenal storytellers. So really finding somebody who can tell your story well and help you be successful. I think this is why we are at the top of the market cycle. I think there's going to be amazing innovations coming out over the next 10 years across a variety of industries. So, just having your cash kind of ready for when the right opportunity comes along. It's okay to sit and wait sometimes and be patient. Patient money usually always wins.
Well, that's good advice. So how best for listeners to get back in touch with you?
Yeah, you can find me on the LinkedIn here. My website is joyschoffler.com. So you can visit me there as well.
Great. We'll add those to the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you, Hall. It's a pleasure to be here.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org.
Alti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.